Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 28th, 2024, and we're diving into the latest earnings report from F5. Joining us is John, our Senior Analyst from Smart Stock Watch. John, F5 has just released their fourth quarter and full fiscal year 2024 results. Can you give us a brief overview of what stood out to you in this report?
Thank you for having me. F5 has reported a strong performance, particularly in their software segment, which saw a 19% increase in revenue for the fourth quarter. The company has also achieved double-digit EPS growth for the fiscal year 2024, which is quite impressive given the challenging macroeconomic conditions at the start of the year. Additionally, F5 has announced a significant $1 billion authorization for share repurchases, indicating confidence in their future prospects.
Revenue and profitability overview. Let's start with the top line. F5 reported a net revenue of $747 million for the fourth quarter, which is a 6% increase year over year. John, what are the key drivers behind this growth?
Absolutely. The primary driver of this growth is the software segment, which saw a 19% increase in revenue compared to the same quarter last year. This reflects F5's successful transition from a hardware-centric company to a leader in security and software solutions. The company's focus on innovation and expanding its multi-cloud offerings has clearly paid off.
And what about profitability? How has F5 managed to achieve double-digit EPS growth for the fiscal year?
F5's operational discipline has been a key factor. The company reported a GAAP operating margin of 23.4% for the fiscal year, up from 16.8% last year. This improvement is due to effective cost management and a focus on high-margin software products. The non-GAAP EPS for the year was $13.37, up from $11.70, highlighting their strong financial performance.
Operational efficiencies and future outlook. John, F5 has shown significant improvements in operational efficiencies. Can you elaborate on how these efficiencies have contributed to their financial performance?
Certainly. F5 has managed to increase its GAAP operating margin to 23.4% for fiscal year 2024, up from 16.8% the previous year. This is a result of their strategic focus on high-margin software products and rigorous cost control measures. Additionally, their non-GAAP EPS of $13.37 reflects these efficiencies and their ability to deliver value to shareholders.
Looking ahead, what is F5's guidance for fiscal year 2025?
F5 is guiding for a revenue growth of 4% to 5% and non-GAAP EPS growth of 5% to 7% for fiscal year 2025. This guidance reflects their confidence in continued demand for their software solutions and the resilience of their business model in the evolving multi-cloud environment.
Strategic initiatives and market position. F5 has been undergoing a significant transformation from hardware to software. How has this shift impacted their market position and revenue streams?
F5's strategic shift towards software has been pivotal. Software revenue for fiscal year 2024 was $735 million, an 11% increase from the previous year. This transition has allowed F5 to diversify its revenue streams and expand its total addressable market. However, it's worth noting that systems revenue declined by 20%, which underscores the importance of their software and services focus.
And how does F5's global services segment fit into this strategy?
The global services segment, which grew by 4% to $1.54 billion, plays a crucial role in supporting F5's software offerings. It provides the necessary infrastructure and support to ensure seamless integration and operation of their solutions across different environments, enhancing customer satisfaction and loyalty.
Risks and challenges. John, while F5 has shown strong performance, what are some of the risks and challenges they face moving forward?
F5 operates in a highly competitive market, which poses significant pressure on pricing and innovation. The 20% decline in systems revenue highlights the challenges in their traditional hardware business. Additionally, ongoing supply chain disruptions and economic uncertainties could impact their ability to source components and maintain margins. These factors require careful navigation to sustain growth.
How is F5 addressing these challenges?
F5 is focusing on strengthening its software and services offerings, which are less susceptible to supply chain issues. They are also investing in R&D to stay ahead of competitors and meet evolving customer needs. Their robust balance sheet and cash flow provide a buffer to weather economic uncertainties.
Key takeaways. In summary, F5 has delivered a strong performance for fiscal year 2024, with significant growth in their software segment and improved profitability. Their strategic shift from hardware to software has positioned them well for future growth, despite some challenges in the systems segment. John, any final thoughts on F5's investment prospects?
F5's focus on software and services, along with their strong financial position, makes them an attractive investment, especially for those looking for exposure to the growing multi-cloud and security markets. The $1 billion share repurchase authorization further underscores their confidence in long-term value creation.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on F5's performance in the comments below. Until next time.